We are live, folks. We are live. You are now joined in on the number one most highly voted Thursday night stock charts podcast with a guy middle-aged with glasses, blonde hair with some gray there on the internet. So welcome and glad you're here. All right. So we have a big announcement. St. Louis Fed President Bullard says he's stepping down from the Federal Reserve. He's been there for 33 years, 10 of which he's been the president of the St. Louis Fed. This guy has been a mover and a shaker. So what does it mean for the markets? Not much. Not much. He was more of a hawk in recent months. One of the more pragmatic guys on the Federal Reserve. A little bit about him. He's again been there for 33 years, served as president for 15. He's a non-voting member of the Federal Reserve, so he would not be voting for the remainder of this year. So it's really not going to be impactful on the Federal Reserve decisions for the remainder of the year. He has backed interest rate hikes. He did so back in May. When I checked in on two metrics where after this was released, I checked in on the CME. Wow, they increased the odds of a rate hike in July to now 93. This was 92.4 just before this announcement and immediately following. Now it's increased. So I still don't think this is going to have an impact on the market because when I took a look at the futures action, I was eyeballing NVIDIA into the close. I wanted to sell some premium, meaning sell some calls, not buy them, but sell them to generate some cash flow. And NVIDIA is now above resistance levels we were flirting with prior to the close of action today, as you could see back here. Now, in terms of what the rest of the market is doing, this is only a 1 minute chart. Let's go pull back here. We did see a pullback off the highs. Let's go over to the big chart. I had to reboot. All my symbols are gone. There we go. Okay, so the NASDAQ as a whole did pull back off the highs of the session, but we are now retaking that ground in the after hours session. So here is your lower band of the rising uptrend channel on a 15-minute chart. Very volatile. And here is your upper band of resistance. You can see that we broke through one resistance level here. And another we were flirting with at the close. I think well, I'm going to pause on the I think. I'm going to go ahead with the I think. Absent bank earnings coming out tomorrow, were that not the case, I would think that going by the charts, that in all probability, we're going to continue up higher going into Friday, especially given that Fridays are typically a short covering rally. Now, we do have bank earnings coming out tomorrow, so that could influence the trade if we get disappointing numbers. Calendar. Who's coming out tomorrow? Okay, so tomorrow we have JP Morgan Chase, Wells Fargo, BlackRock, Citigroup. So these are names that could rock the market if they disappoint. So Big day tomorrow. Not much in terms of economic data. You do have some import price data coming out. Shouldn't be much that could rock the market, but certainly JP Morgan, Wells Fargo, BlackRock, Citigroup could move the market. So more to come in the morning. Let's say hello to folks as people sashay in here on this beautiful summer's night. Corey, good afternoon, Bob. I would not call it bullish or bearish. I would say it was more. Very good. I like that. Mr. Pete, welcome, Pete. Danny, hey, brother. And there is Franklin, the man, the mission, the gentleman. RB, scorching hot LA. Yes, it's hot here too. Your thoughts on shorting AMD and the SPY at this level? I'm reluctant right now. We'll take a look at the chart of the SPYs in a moment. I gotta get my pen and paper out here. Write down symbols so that I don't forget. My trusty notebook. So yeah, I don't think I would be shorting right now. I think that we need to get to the first big reports out of the triple Q names. That'll be Netflix, Facebook, not NVIDIA. NVIDIA comes, I believe, in late August. But those big names, Microsoft is early on. We need to get those names out of the way. The markets will take the pulse of those names, the banks, and so on and so forth, and then they're going to run with it. And the big question that we need to ask ourselves is this. Do we get, as the markets have priced in, multiple expansion? Frankly, we have already seen expansion into expected earnings growth. If they disappoint, you're going to see this market get rocked 6 ways from Sunday. So I wouldn't necessarily go shorting right now. And in fact, I would be very, very careful about that because if you short right now, you're going to be shorting into earnings of, let's say, AMD. That's a very risky bet. What I'm doing right now is taking advantage of some of the implied volatility that's out there. And I'll sell some calls that are set to expire before they report earnings. We're not doing any earnings trades this quarter. I want to avoid the drama of earnings trades. There's always one that goes bad, always one, and it rocks the profits and all the other ones that you made. It's just not worth the headache to me anymore. So be careful about shorting a stock into earnings. Very, very risky. We did close out today a very, very large position that we had in Tesla. We had a big strangle on Tesla, and we made a good amount of coin on it. It was like a little annuity every day would pay us, ching ching ching. But the reason why I took it off, I wanted to hold it until at least Monday so we can get the rest of the weekend time decay out of the options. But what they started to do is they started to break Tesla out today, and implied volatility began to expand. So that was telling me that they were setting a trap for me to stay short of that position. That way they could jack the price of Tesla up. I can't get out of the trade before earnings, and I'm in a very, very bad position. Maybe I'll get lucky and not lose money, but that's usually not the way it works if you're trapped in a trade going into earnings. So we profited. We're satisfied. Now we have a whole bunch of capital. Now we're looking to redeploy that capital. We opened up a new trade, a strangle on Meta. They report earnings after the 21st, which is where our options expiration date is. And that way we could get those options just to expire worthless. So very, very deep and wide strangle on Meta. And if they jack it up again tomorrow, along with NVIDIA, we're probably going to sell more calls because they're very, very overbought. And we're going to be looking to short them using options, but we're going to be selling the options, not buying them. And they will all expire before earnings. Very, very wide. So AMD, Danny, RB, but he was not a voting member for last year. I'm only going by what it said here. Maybe they go a couple of years of not voting. I'm not sure how that works, to be honest with you, but I know they have terms where they're not voting and terms where they are voting. And at current, he was not a voting member of here. To be sure, Bullard is not a voting member on the policymaking committee this year. I should have highlighted that. And there we go. DZ Burton, welcome. Uh-oh. Gray hair's better than I thought you were going to call me out for calling myself blonde. Every once in a while, I still see some blonde, but usually it's like, it's gray. It's gray. Mr. Sean, welcome. Yeah, UNH tomorrow morning. Yep. RB, with all the commercial real estate losses, bank earnings will be questionable. I don't think they're going to be reflected in the money center banks. The money center banks and the investment banks are reporting tomorrow. It's the regional banks that report not next week, but the following week. That is where the problems are going to lie. So, yeah, I agree. That's going to be a very, very interesting series of reports. Jody, hello. Talon, good afternoon from CA. Hot like the market. Paul, hello. Did your alert go off for CF this week? I got to look. I had a bunch that fired off. Let's look. Yes, it did. Yes, it broke out. We broke out, retest, follow through, bullish. See what the weekly chart looks like. A little bit of resistance above, but it looks like we're poised to break out on CF. Okay. What we're going to do tonight is what we typically do: go over some headlines, talk about some data points, and we'll go over the weekly charts and talk about how do we appear poised to close out the week. Remember, one trading day left to go. Guaranteed, as sure as God made green little apples, that there will be a chart that looks bullish today or bearish today, and by the end of business tomorrow, it looks the opposite. And my guess is that it's going to be the dollar. And I'll show you why in a moment. Because today we booked profits on platinum. Remember that platinum was the first trade that we put on using the algorithmic money flow report that I get. And of course, I use technical analysis in conjunction with it. And we did very well on that trade. I think about 6.5%. We bought it last week. It was a very small trade, but we did well with it. And we'll look to buy it back on a pullback. Okay, so we did earnings calendar. All right. So CPI, Consumer Price Index. Why are we rallying right now? We're rallying right now because all is right with the world. The Federal Reserve is done raising rates. You don't have to worry about it. They're all good because CPI is coming down and we no longer have to worry about inflation. That typically does not happen. Inflation goes in waves before it's finally culled. Maybe he's got the right recipe, the secret sauce, but time will tell. Apparently, the metals market does not believe that he's got it right because gold, silver, platinum, they're all ripping through the ceiling right now. So they're not convinced that inflation is under control, or else you would not see them rallying. If they believe that there was going to be disinflation or deflation, they would be dropping like a rock, which they are not. So we're going to see how they close out the week before we make any moves on those names. But wow, what a week. But there's a chart I'm going to show you in a moment that should have you a little bit wary about buying those stocks right now. And we'll go to it in about 5 minutes. So CPI rolling over. You could see this is why we had the correction last year. Here's why we're rallying at current. The question is, does the Federal Reserve raise rates? And I would argue that, yeah, they are, because one thing that we need to remember is that when you see equity prices rallying higher, like the SPY now, forget about the SPY. Let's just bring up the QQQ. All right, great rally. Looks like it could even go further. The problem is this, is that they're very, very expensive. They're extremely expensive. This is why I was talking earlier about forward-looking multiple expansion. The markets are pricing this in. If they don't get rock solid earnings this quarter, we run the risk of a major correction in the markets. And I don't know how much better earnings are going to get that would justify even a 29 handle if earnings come out really good on the Schiller PE ratio. So I think that they're pricing in perfection for this earnings season. And when you take a look at the market participants and what they're expecting out of the Federal Reserve, they're by and large, this is a done deal. They are going to raise rates in July. Don't listen to CNBC. Don't worry about it. They're talking heads. They'll pontificate. They'll take parking space up in your head. They're going to raise rates. The question is, how do I know? I know it because the Federal Reserve never disappoints the market. Whatever they price in, that's what they do. So the question is, are they done in July? Is that a continuation of last month's pause? Will they be done this month? The markets aren't saying that, because when you go out to September, apparently there's no August meeting. Remember this. Let me go back to July for a moment. We are at 5 to 5.25 basis points at current. They're expecting, by and large, this is about 93.7% of market participants surveyed are expecting a rate hike in September. November, again, a very high number, 78.4 are expecting a quarter basis point rate hike. 15.1% are expecting a half basis point rate hike. I don't think that's going to happen, but the preponderance of market participants surveyed believe that for the next several months, we are going to continue to see rising interest rates. Can stocks hold up in that environment? We'll see. Things get a little bit wonky as you go out and into December, where by and large, rate hikes are still factored in, but you have some that are predicting a rate cut. But then you have people out there, this is kind of thin data, I think. They're looking at 3/4 of a basis point rate hike. I don't think that's going to happen. Actually, no, I'm sorry. That's not 3/4 of a basis point. They're expecting an increase. I don't know what that is. I didn't add all these up in my head. So, by and large, for the remainder of the year, they're expecting rate hikes throughout the remainder of the year. And equities are very expensive. So we need to worry about an event. We really do. I mean, I think that stocks are going to go up higher. As the market has gone from triple Qs to broadening out to small caps. I said it the other night to members. I said, I don't even know what to talk about the markets tonight. I just want to talk about observations I'm making about these stocks that have been left for dead, and now they're picking up steam after long bases have been built. They're beginning to break out. I think we're going up higher. We closed out shorts on Tesla. Thank God we did. We closed out most shorts. We still have a small short on the Qs, but insignificant. So, so this is out of Sven Henrik, and this is a very, very valid point that he brings up, and we can't lose sight of it. So here's the increase. I'll come back to the text in a moment. But here's the increase over the past year and a half in Fed funds rates. So all these rate hikes have not hit the economy yet. They have not hit the economy yet. And many of these are half basis point interest rate hikes. So his comment is, big rallies near Fed pauses make everyone forget about lag effects. Lag effect is that rate hike from last January has yet to hit the economy, but it's coming. It's coming. They generally take 12 to 18 months to filter through the economy. This time last year, effective Fed funds rate was 1.58%. Folks, we're at 5%. Think about that. All of this is now filtering through the system. We're still at the beginning of this wall to hit. He's got a point. He's got a point. And when you think about all these rate hikes coming into 2023, and add to that all these rate hikes forecasted by the markets, you got to wonder, how expensive can they allow this market to get? Because going back to this chart here, you got to remember that the big expensive equities it's inflation in its own right. It's inflation. It's where money's flowing. It's creating a balloon, a bubble, and that bubble's eventually going to burst. So this meme here is basically Powell saying, "Wait a minute, chill out. You guys are getting ahead of yourself. If you got to continue this with PEs now up in the S&P 500 up in the 30s, I'm going to continue raising rates because you can get away with it now." Now, one thing that we need to keep an eye on is oil. Oil filters through to everything. So you may be saying, Bob, you're going to talk about PCE, you're going to talk about the CPI. You got to worry about the core, and that backs out food and energy. Correct. I agree. But what about if you're a tire manufacturer? You're the CEO of Cooper Tires. The price of your tires are calculated into core CPI. The however is, what are tires made out of? You may be saying rubber. Accurate. But what else are they made of? Petroleum products. If oil goes up, the price of that tire goes up, and that jacks up the core. So don't be fooled that rising oil prices have no impact on inflation. They do. So oil broke out last week. This week, a continuation breakout. Very strong chart here. So I'm not saying to worry right now, but buckle up. All is not right with the world. And one last caveat, retail money market inflows continue as the Fed bank bailout facility usage rises again. Folks, this is becoming old hat here. So this really began to skyrocket back here. I mean, this has been an ongoing issue. It's been a clear and defined uptrend, but it went parabolic back in March. What happened in March? The regional banks started to go belly up. And while everybody said, it's all good that's behind us now, not really, because the problem is still out there. It's only being papered over by the Federal Reserve. These banks are in trouble. And I've gone over this in the past, the reason as to why. Commercial real estate. That's the big problem. And it's not going anywhere anytime soon. So the more that the Federal Reserve continues to ratchet up interest rates, the bigger the problems become for the regional banks and maybe even a large money center bank. So be careful of listening to the talking heads on CNBC. There are problems out there. And one of them could be the fact that the Federal Reserve last week only rolled off. This is as of yesterday, released today, total assets under management on the Federal Reserve's balance sheet. They dropped off by only $2 billion. That's not much. It's basically flat. So do we begin to see this begin to move up? We'll know next week if this downtrend is now in the rearview mirror and we begin to move up on the Fed's balance sheet. Because remember, the federal government has come out and gotten their $4 trillion deficit spending bill. They've been able to raise the debt ceiling until 2025, minimum $4 trillion and beyond. And somebody's going to have to finance that. Guess who? These guys. let's do some analysis of the week as we go into a Friday. And one thing I want to point out here is that I always talk about the yield curve, and the yield curve is up yet again this week. It's steepening again this week, and normally that is negative for equities. In fact, here's the correlation up top here. Correlation of the yield curve, 2s versus 10s, versus the S&P 500. They are negative. Not only are they just not really correlated or just a little bit not correlated, they're negative spot 61%. That's how bad it is. You don't get much worse than that. So the yield curve continues to rise on the week, yet where S&P 500 is shrugging it off at current. That becomes a problem, especially when we begin to take out prior highs. And it can happen very, very rapidly if things don't go well in the economy. So just beware that this is out there. Again, I think that the markets are going to continue up higher until they don't. That's it. It's pure and simple. The charts look bullish. We're going to go over them in great detail in a moment. But I think that in the short term anyway, they are going to go up higher. But there is going to be a pretty major correction in the market in the coming weeks. I predict that during earnings season, after we get a glimpse of earnings, the banks are in the rearview mirror. Some of the big tech names are in the rearview mirror. You get a pulse. It's like when you ever see on election night where these pontificators on the news, the talking heads, they're calling a state with only 20-25% of the vote in. It's kind of like what earnings season is sometimes. You only need a certain number of industries, sectors to report, and you got a pretty good idea how the rest of the markets are going to come out and how the direction of the market should be, negative, positive. Do we have multiple expansion or do we have multiple contraction? So we're going to know fairly soon. I don't think we're going to have to wait for NVIDIA earnings to understand whether or not the street is happy with the earnings out of Wall Street. And they had better be pretty darn good. Remember, we're over 31 on a Shiller-PE ratio on the S&P 500. The mean is 17 going back historically. Now, this is the big chart of the week. Last week, we met here. We saw a major, major breakout on the 10-year yield. This week, talk about an outside reversal bar. Folks, if you don't know what that is, I have a 5-part video tutorial, my top 5 favorite candlestick patterns. Link below, free. There's no shenanigans. It's free. Take it. Enjoy it. So right now, at current, with one trading day left to go, a lot can happen here. One trading day left to go. We look as though we are about to break down and close below. This is a bear trap for, a bull trap for yield hawks. But in terms of those that are bullish on bonds, very bullish week, not an outside reversal week, but quite possibly a sign that we have a floor on bonds and they may rally up higher. Tips, a very strong chart here. So this is another instance where you have the market saying, listen, we don't believe that the Federal Reserve is being aggressive enough. Think about it. We all know they're going to raise rates. But what the tip market is saying, what the gold market is saying is that it's not enough. It's just not enough. And I think that's why you're probably seeing the forecasted rate hikes going out into December, January, still out there, very prominent and very probable that they'll raise rates, absent some weakness in the economy. The dollar. What can I say about the dollar? I mean, this is just a cluster F of a chart. Really, really bad show. So bad chart, bad show. And I do believe at current, we have broken down significantly. We have some support here. But man, we close right at a support level today. Now, I mentioned earlier that I think that the surprise chart of the week is going to be the US dollar. Not that I think it's going to close positive, but I do think that we're probably going to get a rally tomorrow, especially if bank earnings come out. and they are bullish. So here's the dollar bull ETF. I want to show you a 30-minute chart here. Take a look at this. Good close, final 30 minutes trade. I think they're going to spike this. I think they're going to spike this higher tomorrow. So for those that are out there looking to buy gold, silver, I would caution that you wait. Let this unravel. Let's see what happens here because this is unsustainable. This is going to rally probably tomorrow. And let's see whether or not the price of silver, gold, the mining stocks are truly under accumulation. And then we will take our cues from the dollar. If they begin to peter out, we find support on the gold and the gold mining stocks, silver. We're going to have to start buying them back up again. Euro closed out this day closed out the week strong today. One trading day left to go. 200 period moving average looking good. Let's take a look at a 30-minute chart. I bet you it's the exact inverse of the US dollar. And it is. Look at this. RSI on the euro is a 90 handle. This is unsustainable. In fact, I want to check out premium on the euro. Can we sell premium? Nah, not enough compensation. So the euro's strong, yen's strong. We talked about these over the past couple of weeks that we expected the rally in these names. We got the rally. Dollar was the victim. VIX, I mean, wow. A basket case. Really, really bad stuff. You know, we didn't go into the week overly hawkish on the market because the VIX just couldn't hold its mud last week. Yeah, it closed up, but all up weeks are not made equal. It's the quality of the close that matters, not the fact that you have a green candlestick or in this case, a white candlestick. That doesn't matter. What matters is the close. Now, they tried to break it out this week. No go. Maybe they'll do it tomorrow for all I know. Big topping tail last week shows us that we have resistance above. So right now, the path of least resistance for equities appears to be to the upside. Dow Transport's breaking out on the week. And in fact, we have taken out the highs, assuming that we close there, from back in January of this year. So we have, you know, this is all trading comes down to many, many times, is this. Just take your crayon out. Here. Do we have higher highs? Do we have higher lows? We do. Check the box. Do we have a retest of the breakout point? Yes, we do. Path of least resistance is up. It's a bull market. Dow Jones weekly chart. These haven't broken out yet. Well, technically they did. They broke out back here, but they've been consolidating for several weeks now. But if you believe in the Dow theory, which I do, and if you believe that the Dow Jones Industrial Average should validate the move in the Dow Transports, then we should expect to see a rally in the Dow Jones Industrial names. They're going to be reporting very, very soon. S&P 500 weekly chart. This is a breakout. This is a breakout. So I was asked earlier, do we short here? No. I mean, it looks as though we want to go higher. Daily view. You know, are we extended? Yeah, we are extended. Volume was good yesterday, dropped off today. I'm not seeing any bearish divergences here that would have me wanting to get short at current. I think that right now is fighting the market. You want the way to properly do it is this, and sometimes I don't do it. I go by my gut, which is not always the right thing to do. The right thing to do is to simply draw your trend lines, Here's your upper band of resistance. Here's your lower band of support. Short up here, buy down here. If you break this lower band of support and you get your retest and it fails to hold that attempted rally to try to recapture support, short into it, lean into it. But it's best from a risk-reward perspective to wait for the breakdown below support. You could short it up here, but I would stay very, very small because it's really, really speculative. I think the better thing to do in this type of market environment where it's completely insane is to sell deep out of the money calls, maybe put on a call spread to protect your upside or your downside, I should say, and you just collect rent on the market. If you want to be a landlord, I'm going to start using that. I just made that up. Copyright protected. If you want to collect rent on the market, the stock market, start selling premium. Have a little of annuity that pays you every single day. Had a bad swing trade? Okay, that stinks, but my little annuity paid me today. It offsets a lot of the hurt you could feel in the market. Triple Q names. Can this be shorted? Not yet. Not yet. It's very extended, but it has been very extended. Volume is very, very low. Let's take a look at a daily chart here. Momentum continues to build. MACD may go positive tomorrow. So much for the MACD working out for traders, man. Look at this. It went negative on the histogram, negative on the slow and fast line, yet we're breaking out to 52-week highs. That's why you can't really rely upon indicators. Price and volume action matter most. The banks, really good week here. First in many, up over 2.5% on the week. Horrible volume. Daily chart. Good price action here at the upper band of the rising uptrend channel. I would not short this because of that, because you have a lot of bank earnings coming out over the course of the next week and a half, 2 weeks, if you include the regional banks. Technology looking good here. It's going up higher. Semis broke out today. NVIDIA and Fuego. We traded NVIDIA to the long side. I left money on the table on that trade. I should have stayed long of it. LABU, good week so far. All right, so LABU I want to talk about for a moment. This is a biotech ETF, not for the faint of heart. I've been very deliberate in not adding more to our current position, but I think that's about to change as of tomorrow. I'm going to do this. I think that we're going to flatten out on this momentum indicator. We're going to hook up. I think I'm going to be adding more to our LABU position as soon as tomorrow. So members, I'll drop a note in Slack. Rising uptrend channel, little cup with handle formation, sexy stuff. Let's take a look at a daily chart, LABU. Yeah, I drew this a while ago. Higher lows. I was asked about LABU today, and it closed at the 20-period moving average. Closed below it. It faded on the day. And this is why it's always best not to trade intraday. Wait for that final minutes to trade. Spare yourself having to sit at your computer all day long. Wait for the final couple of minutes of trade. How do the charts look? You want to buy it? Is it closing strong? That's what really matters. And in fact, let's check out the 30-minute chart. It did not close well on the day. Momentum is going in the wrong direction. It did not close well. So what we'll do here is we'll get our crayon out. We'll watch to see that it does, in fact, close above. Yeah, broke trend. It closes above that weekly breakout point. If it doesn't close above that weekly breakout point, we avoid. We're not going to buy it. It's got to have a weekly breakout for us to go adding more. So LEBU, maybe we'll be adding more tomorrow. More to come, members. Staples looking good here. It looks like they're getting ready to break out soon. All these are weekly charts. Weekly charts, consumer discretionary. I don't know why this is going up. There's something going on out there because the consumer buying. Here, I'll show you. Let me see if I have it up here. I believe I do have it up. Yeah, this is it. Okay, so this chart here, in blue, credit cards and other revolving plans, right? So that is your credit card debt, and the esteemed, the very venerable banksters that are out there. This guy here, this is in red. The interest rate on said colored cards, credit cards. So as people become more and more in debt, they just keep clamping down harder. It's slavery. It's slavery. I'll stop there. Get off my soapbox. So that was the symbol of the consumer, the credit card debt and interest rates paid. They are enslaved. Yet consumer discretionary names are ripping through the ceiling. Go figure. Daily chart. Because I'm looking to short these suckers. Volume dropped off today, but you've had good volume of late. You know, it's good to just simply consolidate. I wouldn't short this right now. Emerging markets, in fuego, folks. In fuego, emerging markets looking really good here. We own this. We have a potential weekly breakout on EMXC. This is emerging markets ex China. We don't want any China in our portfolio. Nada. And we are breaking out. EMXC on the year, I believe, is outperforming EEM. Let's check that out because I've been pounding the table on this for quite a while. Watch this. I'll get embarrassed now. I'll be wrong. It's up 14.1%, whereas EEM is up only 9.67%. So clearly, ex-China is where you want to be on emerging markets. Why are they rallying? Weaker U.S. dollar. XLE Energy breaking out, looking good. Oil's going up. What's the correlation between oil and XLE, the energy stocks? Right here. This is why you come here every Thursday night. I show you this stuff. Very highly correlated. 94% of the time, they trade in tandem. You want to trade oil? You want a dividend? Buy energy stocks. Consult a financial advisor. Oil, we already went over. Natty gas pulled back this week. We kind of expected this. I don't have my report on me that shows me if the machines are buying. Gasoline's going to break out. I'm not happy to say that. Gasoline's getting ready to break out. All this is inflationary. And this could be the reason why you're seeing gold and silver rally, and they're saying, you know what, this quarter basis point stuff, it's not going to work. Gold, a breakout. We've been in a bear market for several months. Now we have a breakout on gold, looking very, very good. Very, very good, I must say. I own it. I'm glad. I want to go over Bitcoin. Don't let me not get away with going over Bitcoin. I bought more today. I bought it after hours, members. That's why I didn't put it in the chat box or the Slack forum. GDXJ weekly chart up over 10%, 10.25%. Nice move here. Let's see whether or not we hold this breakout in a weekly time frame. Let's check out volume on the day. Strong price action. We need a higher low here. I think we're going to get it soon as that dollar unwinds and heads up higher for at least a day or two. On that rally, I suspect that that's going to be the opportunity. If you're not currently in the gold mining stocks, silver, gold, etc., that's going to be your opportunity. We sold platinum today. I think I mentioned that earlier. We sold platinum today. When I saw that dollar intraday chart, how tight it was, and that was going to pop up higher, I said, let's make this money real. Get out. Gold money. Wow, look at this chart. We own this. Breakout weekly, a monthly time frame. Still early. So we don't know whether or not it's going to hold that breakout, but we're looking really, really good on gold money. Silver weekly chart, monster. This is a leveraged ETF up 15.28%. What else do we have? Silver miners we own up over 10.82%. This is PPLT. This is our ETF for platinum. We sold this today right at resistance. We're looking for a pullback. We'll look to re-enter on that pullback. Tesla, for the first time in, I think, a couple of months, I have no position in Tesla. Chipotle Mexican Grill falling apart. Netflix going to be reporting very, very soon. Meta, we opened up a strangle here today. We're going to be selling more premium tomorrow. So again, we're collecting rent on Meta right now by selling premium. We're going to be selling more premium tomorrow. Why? Because of this. IV percentile, 51%. Options are being priced very, very expensively because there's demand. People can't afford the common stock. They're trying to buy it in front of earnings. They're buying up the junk, deep out of the money call options to get into this trade. What did we do? We sold them to them. We sold them to them. Amazon, right at resistance. I mentioned this last weekend. I put out a video last weekend that we were going to hit resistance. We're right at it right here, right now. They're going to be reporting very, very soon. AI. Ooh, this is looking interesting. They didn't do much this week. Let's go to a daily chart. I want to go back to the weekly chart. I just spotted something. Potential double top here. Reversal day. But take note of this. Look at the stochastics. This is a momentum indicator. We broke out, pulled back, did a retest, and it appears as though they're trying to break it out higher. I just don't want to buy it in advance of earnings. What else do we have up here? Rivian. Great week last week. A bit of a pause this week. Daily chart. Topping action today. We need a pullback on Rivian. Riot blockchain. Franklin dropped a note in the Slack forum a little bit earlier. It was up massively today. And I guess this is a good segue into Bitcoin. Look at this move up higher. Monster move up higher. Up 31% on the day. And guess what? It's going up higher. What they're doing is that these Bitcoin miners, they are hoarding the Bitcoin that they're producing, thus driving up the finite amount of Bitcoin that's out there. So Riot looking like a monster. This is one of the few times where it's extremely overbought. I think it could still head up higher, despite the fact that we have RSI at 85.83 and the fact that we're up and into the third standard deviation Bollinger Band. I would use a trailing stop loss order on this and let the market take me out. Because one day you're just going to get a big surge up higher and then a reversal. So if you get that big surge up higher, that trailing stop loss order resets at the highs of the day. And let's say you're using a 5% trailing stop loss order. It opens up, I don't know, it opens up 10%, 8%. Well, at least you're still making money by the end of the day because you got stopped out on the day with a 3% profit. So many times when you see a stock have a blow off top, it looks like this right back here. Gaps up, reverses, then you go into a decline. Gaps up, the sells off the highs of the day. Next day fails, and you go into a decline. So I expect no different here. That's probably what's going to happen. So I think that it does go up higher going into tomorrow and into next week, probably. How does the monthly chart look? Monthly chart, we're going to have a bit. This is where we're going. We're going up to 25 bucks a share on Riot blockchain. That's where we're going. We're probably going to see some resistance up there. Where do we close? $20.29. So that's a little bit too speculative for me to buy here and hope to get to 25. Just because I'm saying it's going to go to 25 doesn't mean you're not going to get a pause first. So I would wait for a pullback, then enter the trade because these surges don't end well. Take a look at how it happened back here. Look, if you're using a trailing stop loss order back here, you would have captured a lot of this profit. If you didn't use it, you got hurt. All right, let's go do some chart requests. We have about 6 minutes to go. Folks, we're going to be using TrendSpider, automated technical analysis using AI. So if you don't have automated technical analysis in your toolbox, you are missing an arrow in your trading quiver. 35% discount code below, 7-day free trial offer. I give it away free to silver and gold level members. That's how much I believe in it. Let's get to it. AMD. It's really come back from the grave, huh? I like it. Quarterly chart anyway. It's looking good here. They're going to be reporting soon. Let's take RSI off. RSI, where are you? There we go. It's better. We do have a little bit of a resistance level above. I think we need to close above. Sorry, my microphone's not in front of me if you can't hear me. I think we need to close above 117.66 on AMD. We close out the month above 117.66. We have earnings in the rearview mirror. I would be a buyer of AMD. Daily chart. It broke out. It broke out. Here's your upper band of resistance. I didn't draw this. That's the AI. It broke out. Looks like it's going up here to 117. It's going up right up to that resistance level, 117.66. So I like it. I'm bullish. I think it goes up higher. Tesla for Jody. Did we do Tesla? No. I will do it for you, though, because you are, Jody, you are one of a special character here, and I'll tell you why. We don't get many females. We need to nurture and make sure that you are engaged, and we will accommodate you whatever we need to do because there's way too much testosterone in this crew. We need some estrogen to calm us down, let us think straight. So thank you for being here. We will, of course, go over Tesla. So let's do Tesla now. Okay, so Tesla had a really, really good day today. It was so good on the day, I had to close out a position. I had a deep out of the money strangle. We were profitable, but I could tell that they were getting ready to squeeze me and squeeze me really, really hard. So we did not want to let a profit turn into a loss. What we did is we booked our profits, moved into the sidelines, and we lived to play another day. Weekly chart, Tesla, one trading day left to go. Bullish. It's going up higher. Just keep in mind, it reports on the 19th. So I would not be a buyer in advance of earnings. Lord knows what's going to happen. This is a very expensive stock. daily view. It's going up higher. It wants to go up higher. You're going to have a little bit of resistance up here at 281.54. If it gets through there, it's going to 285.38. You want to day trade it if you're so inclined, go for it. I would be biased to the long side, unless of course they gap it up higher into resistance. Then I would short it for intraday. I wouldn't stay overnight short of it. But stochastics looking really good here. Higher lows, very strong stock. Closed just off the highs of the day today. It's going up. Thank you. That's what my kids say. I'm a character. You are. All right, all. If that's it for this evening, hey, folks, thanks for being here. Awesome night. Have a profitable trading day tomorrow. Have an awesome, awesome weekend. Relax. And again, as with always, my pleasure to be here. Thank you for being here. Have a great night and be well. Like, subscribe. You know the deal. Be out.